In Ethereum, I think the moment is really this year, because this is the year that Wall Street and governmental regulations became friendly to think about rebuilding on the blockchain. And part one, of course, was the stable coins, and stable coins have really been the breakout hit in crypto. We coined it as the ChatGPT moment for crypto because it has become a breakout product. I think that there is a lot of there to Ethereum being the base where Wall Street is going to build a lot of the future. I think Ethereum can reach 60,000 per token in that world. And that would proportionally benefit the DATs because Ethereum's around 4,500 today. So a 15 times increase plus the NAV expansion. So there would be a lot of upside in the existing Ethereum treasury stocks in that world, and many would become multiple hundreds of billions of dollars of market cap.
Ethereum now stands at a major turning point, balancing between its past success and future potential. After a strong rebound, it's been stuck in a tight range, with heavy buying around $3,400 and resistance near $4,700. Traders are watching closely, as the next move could be explosive rather than gradual. Beneath the surface, a silent tug-of-war between innovation and hesitation is setting the stage for something big. Cathie Wood compares this moment to 1971, when the US left the gold standard, chaos that sparked creativity and reshaped global finance. Similarly, Ethereum could now be laying the foundation for the next financial revolution. Analysts like Tom Lee believe Ethereum may become the backbone of a new system, moving trillions in real-world assets onto the blockchain. But as traditional finance merges with decentralization, one question remains: is Ethereum creating true digital freedom or building a new form of control? Still paying taxes on your crypto gains? What if you didn't have to? With ITrust Capital, you can buy and sell crypto inside a tax-advantaged IRA, giving you a smarter way to grow your portfolio without worrying about capital gains tax. That's why they're the #1 crypto IRA platform in America, with billions in tax-advantaged transactions. There are multiple ways to fund your account. You can make a contribution, transfer an existing IRA, or roll over an old 401k or employer plan. You'll get access to a wide range of digital assets, low fees, and 24/7 trading, all backed by secure, one-to-one asset ownership with institutional-grade custody. And if you have questions, ITrust Capital offers 100% US-based customer support with real people ready to help. Click the link, use code DOSE7, and get your $100 funding bonus today. Start building your crypto wealth, tax-advantaged, with ITrust Capital.
So, overstock was probably the only way someone could buy Bitcoin in the past. And then MicroStrategy came along. So MicroStrategy is almost 2.0 as Bitcoin treasury. What he's done successfully, of course, is really to upscale it so rapidly, because he went from having $2 of Bitcoin per share to over $250 per Bitcoin share per MicroStrategy share today. So he has created enormous shareholder returns because the security business, of course, has continued to really muddle along at basically zero growth. In Ethereum, I think the moment is really this year, because this is the year that Wall Street and governmental regulations became friendly to think about rebuilding on the blockchain. And part one, of course, was the stable coins, and stable coins have really been the breakout hit in crypto. We coined it as the ChatGPT moment for crypto because it has become a breakout product, and it has created two enormous companies, one being Circle, which I know ARK was an anchor investor in the IPO, and the other is Tether. Tether today is raising money at a $500 billion valuation and roughly 300 employees. That's about $1.7 billion of market value per employee.
Now, Bitcoin is at about, 2.4 trillion now, somewhere around there. And Ethereum is 540 billion. You think there is a flippening, as they might say. I'd love to hear you talk about it, but just to set this up, anyone who's listening to this podcast knows that we have in 2030 a forecast of the entire crypto asset ecosystem. And of course, we're going to be modifying this with time. We're doing our big ideas work now, but as of our last go at this, the ecosystem, we expect to hit $25 trillion in 2030. The vast majority of that in Bitcoin, mostly because we look at Bitcoin as, a global monetary system, rules based that we've been missing since the U.S. went off the gold exchange standard in 1971. That's a very big idea. It's a technology, obviously, and it is the first of its kind. And we wrote a paper in 2016 on this, first of its kind in a new asset class. So those are three very big ideas. I'd love to hear your thoughts on why ETH or the ecosystem will surpass Bitcoin.
Okay. Well, if I could rewind a little bit to 1971, in our chairman's message last month, we addressed how gold versus Wall Street grew post 1971. So 1971 was when Nixon formally withdrew the U.S. from the gold standard. The immediate beneficiary was there was demand and a market to own gold. And so people would say that was your, first implication. But what we wrote about and talked about in our message was that in 1971, the dollar became fully synthetic because it was no longer backed by anything. And so there was risk that the world would go off the dollar standard. So in stepped Wall Street to create products to propagate the future of Wall Street, including, and we listed, I think, 14 products that emerged over the next decade, from money market funds to credit to mortgage-backed securities to futures, etc. And dollar dominance by the end of that period went from 27% of GDP terms, but to 57% of central bank reserves and 80% of financial transaction quotes. So Wall Street was created products that made the dollar dominant, and the market cap of equities today is 40 trillion compared to 2 trillion for gold. So in other words, gold is 5% of all available assets. And so in 2025, we think everything is now becoming synthetic or tokenized, sorry, not synthetic. So as we move not just dollars onto the blockchain, which is stable coins, but we'll move stocks and real estate, dollar dominance is going to be the opportunity of Ethereum. So digital gold is Bitcoin. And so in that world, we believe Ethereum could flip Bitcoin, similar to how Wall Street and equities flipped gold post 71. Now, that is just our working theory because I am still a Bitcoin bull. So I'm very bullish on Bitcoin. And I believe your targets for Bitcoin are actually reachable. So we think Bitcoin fair value should at least be 1.5 to 2.1 million, but we can see higher values. But that would, of course, provide upside to a neutral smart contract platform where a lot of Wall Street will innovate of real world assets.
One of the thoughts here is, Ethereum went from proof of work to proof of stake. Now, in the next 5 years, we just think about all of the creativity that is going to evolve in the financial markets around Ethereum. We totally agree with you on that. But there will come a time where we're in some kind of crisis, and then we see that the benefits of proof of work relative to proof of stake, because you're bringing in, as you say, you are bringing in a lot of TradFi and a TradFi thinking into the Ethereum world. So just wondering, if a crisis will be a moment of self-reflection and all right, is there a real difference between this proof of work world and this proof of stake world?
Yes, there is existential questions that'll emerge on proof of stake, but it's also, I think, going to happen with proof of work, because we know Bitcoin mining, for instance, is becoming concentrated in corporate. In fact, I think this year there was one mining operation that actually had won 6 successive block rewards, which is a high level of concentration. And as you know, as we get closer to 2140, the block reward is going to be so small that it may not provide the economic incentives to actually continue mining, which would represent greater concentration.
Tom Lee believes Ethereum is entering a new era where real-world assets, from real estate to stocks, move onto the blockchain, unlocking markets worth trillions. While Bitcoin remains digital gold, he sees Ethereum becoming the foundation of the real economy, just as equities once surpassed gold in value. Lee calls this the start of that shift, with Wall Street building on Ethereum and stablecoins marking crypto's ChatGPT moment. Despite minor risks like reduced staking, Ethereum's reliability and institutional growth signal it's ready to power the future of global finance.
Let's watch more clips from the interview.
I think that there is a lot of there to Ethereum being the base where Wall Street is going to build a lot of the future. As you know, corporate chains are always going to be viewed as fat fingers, someone's fat finger on the scale. And that's just how Wall Street operates anyways. You know, if some bank created a layer one blockchain and they're the oracle, we know that they're tilting that in their favor. And of course, the second is that all blockchains are basically databases, and the security model becomes a question because it's either a centralized chain, which isn't really a blockchain, or it's got a security model that can be exploited. And we know there's so many high-profile hacks that have taken place. And uptime is a third dimension because, as you know, that is one of the prominent features of Ethereum, that its entire history, resilience was an existing feature and has never had any downtime. And I think that that's important when we're thinking about a world of high-speed transactions in a 24/7 world. I think a lot of creativity needs to take place on layer ones. And, you know, I mean, to me, as we think about tokenized world and using prediction markets, a lot of that thinking is taking place around building on layer ones and layer twos on Ethereum. But a broader statement I'd make is I don't think one blockchain can hold the entire financial system anyways, because let's say your 27 trillion is correct, and I believe it is even conservative, because today global GDP is 80 trillion. And we know GDP is an imperfect measurement because it only measures final sales. So let's say it measures 120 trillion of gross activity is what 80 trillion is measuring. Financial system ledger is 120 trillion on the other side of that. If just half moves onto the blockchain of the financial transaction, that's a 60 trillion market. Plus, we know that as you tokenize loyalty and IP, things that are GDP measurements but not financial markets, that's also on the blockchain. So maybe the total, what ends up on the blockchain is 60 plus 20, 80 trillion market versus your 27 trillion. That cannot fit on one ledger. Stats fundamentally trade off the value underlying. And so moving it to 24/7 is just a convenience transaction. It's not transformational because it doesn't unlock anything new. But tokenizing an NVIDIA or a Tesla is very appealing. Cathie and I have talked about this in the past, that the real value and the unlock of a tokenized NVIDIA is that we can do a factor bet. We can then see what's priced in for their Blackwell chip sales or their China sales, because now you take NVIDIA's price and you've broken it into tokenized components. And then you can use a prediction market to hedge yourself. So, Fed's replaced, or the Fed does a surprise hike. I can hedge a tokenized equity that way. The issuer has huge transparency. NVIDIA now knows what's priced in for its Blackwell chip sales, its China sales, and they can therefore work with a lot less, hey, what's priced in our stock? They know exactly what's priced in. So I think tokenized equities is a huge unlock, and it's useful for investors and for issuers. And of course, moves us away from quarterly earnings too.
Yeah, it does. And do you think the administration, that part of the talk about changing quarterly earnings and so forth, might incorporate this sort of thinking?
I would say I wouldn't be surprised, because as you know, the administration has a lot of folks tied into Silicon Valley. And we know that the prediction markets were so useful in that election. They proved themselves Polymarket got 50 out of 50 states right. So I would agree, because that's probably a better way to model earnings than to wait every 90 days for a company and have the CFO tied up for a month sitting in a room, auditing financials.
This is music to our ears. We're all about transparency, right?
Yeah, that's right. I think this would be a really important step in making markets a lot clearer for investors and understanding what they own. It makes it less black box. And so that's why I think tokenization is a huge deal.
Tom Lee envisions Ethereum as the foundation of a massive financial transformation, one where real-world assets like real estate, stocks, and even currencies move onto the blockchain. He argues that this tokenization trend could unlock markets worth tens of trillions of dollars, creating a new digital economy built on transparency and efficiency. Ethereum, he believes, will play the same role for blockchain finance that equities once did for gold, evolving from a speculative asset into the platform where real economic activity thrives. Lee highlights that this shift is already happening. Stablecoins, for instance, are becoming crypto's ChatGPT moment, proving how blockchain innovation gains traction through real-world use cases rather than hype. Still, he cautions that risks remain, from staking challenges to regulatory hurdles, but Ethereum's uptime, scalability, and institutional adoption suggest it's prepared to carry the next phase of global finance. So what do you think? Will Ethereum truly surpass Bitcoin as the foundation of digital finance? And could tokenization of real-world assets reshape how we own and trade value worldwide? Share your thoughts in the comments. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.